Welcome to the Explainer. It's a strange time in the markets. Have you ever looked at the stock market and just thought, how is this possible? The economy's showing signs of slowing down, but stocks, they just seem to be defying gravity. Well, today, we're going to dig into that. We're going to unravel three really interconnected puzzles that are shaping everything right now, from why stocks are so strong to the invisible forces that seem to have crypto in a headlock.
All right, so here's what we're tackling today. First, how exactly are the spending habits of the wealthiest people keeping the stock market propped up? Second, what's this invisible force that's got Bitcoin's price totally trapped? And finally, what in the world does a new U.S. energy policy have to do with any of this? Believe it or not, they're all connected. So let's dive in and connect the dots.
Okay, let's get into our first puzzle, the economy's hidden engine. So here's the thing. We're seeing the labor market cool off, right? And usually that's a big red flag for the economy. It should mean trouble ahead. So you'd think stocks would be falling, but they're not. So why? Why aren't they reacting like you'd expect? Well, the answer is kind of counterintuitive. It's not about the average person's wallet. It's about a very, very specific group of consumers. And that group, it's the wealthiest 10% of households in the US. It's a surprisingly small slice of the population, but man, are they powerful. Their financial decisions, they create ripples that touch literally every corner of the economy. And get this is the number that really matters. That top 10%, they are responsible for a whopping 49% of all consumer spending in the US. Think about that for a second. Almost half of every single dollar spent comes from just this one tiny group. Okay, so when you look at it like this, the contrast is just wild. The top 10% actually outspends the bottom 80% of the country, combined. So what does that mean? It means their financial health is what really matters for the economy. And since their wealth is so tied up in the stock market, they become the primary driver of everything. So you can see where this is going, right? This creates this really powerful, almost unspoken incentive for policymakers to make sure the stock market doesn't take a major dive. I mean, think about it. If the market drops, say, 15 or 20%, this wealthy group gets nervous and immediately pulls back on their spending. And since they account for so much of the economy, that could easily tip the whole country into a recession. So in a weird way, this reality creates a kind of safety net under the market.
All right, that brings us to puzzle number 2, Bitcoin's invisible cage.
Okay, so with Bitcoin, a lot of the talk right now is about the new ETFs, right? Everyone's watching the daily inflows and outflows. But honestly, that might not be the real story. The real action is happening somewhere else, in the options market. Yep, the world of derivatives. And right now, the mechanics of that market are what's really calling the shots. It all centers around this one really popular strategy called a covered call. So what is that? Well, basically, if you own Bitcoin, you can sell a call option to someone else. You're basically selling them the right to buy your Bitcoin at a specific price, the strike price, sometime in the future. You, the seller, are making a bet that the price won't go above that strike price. If you're right, you just pocket the cash from selling the option. It's a way to generate income. And the crazy thing is, right now, one specific strike price is absolutely dominating the market. And that magic number is $100,000. It's incredible. A massive, massive number of investors have all sold call options with a strike price of exactly $100,000. They've all placed the same bet. And this is where the cage comes from. It's pretty brilliant, actually. See, the dealers who buy these options from investors, they don't want to bet on the price. They want to be neutral. So their trading algorithms have to automatically hedge their risk. What does that mean? Well, as Bitcoin's price starts to rise and gets closer to that 100K mark, the algorithms automatically sell futures to protect themselves, which pushes the price back down. And if the price falls too far, they buy futures, pushing it back up. It creates this powerful, automated loop that traps the price. And look, we're not talking about a small amount of money here. The estimated value of all these options contracts is around $10 billion. That's the size of the wall that's creating this price ceiling. Okay, on to our third and final puzzle, the long-term energy play. All right, so there's this new energy auction coming up. And on the surface, it's being sold as a great thing for consumers, promising to lower electricity costs. But what's its true purpose? Is it really about helping us out with our bills? Well, here's the thing. The public story is all about lowering our bills in the short term, but the real goal, it's something else entirely. It looks like this is really about securing long-term funding to build out the power grid. And who needs all that extra power?
the massive data centers that are being built. So it's being framed as consumer relief is actually a way to fund the future of big tech.
So what's the long-term result of all this? Well, it's pretty clear. Higher energy costs for all of us. This whole thing is designed to power an incredibly electricity-hungry future driven by AI and data centers. And that means the structural cost of energy is almost guaranteed to go up. And this brings us right back to Bitcoin. Why? Because Bitcoin mining is all about energy. If the long-term cost of electricity goes up, then the cost to mine a new Bitcoin also goes up. That raises the fundamental production cost, which should, over time, put upward pressure on its price. Okay, so let's put it all together. What's the big takeaway here? What happens next?
I think the main thing to realize is that the market's direction isn't always about the daily headlines. Right now, it's about these deeper, hidden structures. It's about where wealth is concentrated, how the derivatives markets are set up, and these huge, long-term infrastructure plays that are happening behind the scenes. Those are the forces that are really in control. Now, for Bitcoin, things could get very interesting very soon. We've got 2 key dates to watch this month. On January 16th, a piece of that options cap expires, but the really big day is January 30th. That's when a huge chunk of those options contracts expire, and that could be the moment the pressure is released. And that leaves us with the million-dollar question, or I guess the $10 billion question. When that options cap is finally removed, will Bitcoin finally be set free? Is that what's going to unleash its next big move? We'll just have to wait and see.